And David, let me highlight that for a second.
Yeah.
Today, as a venture capitalist, I get pitched every variation of the Redfin model, and it just seems like such an obvious idea. And looking back in history, everything looks obvious. You say this is a crazy idea, but it sounds obvious to us right now. Why was it crazy? Because it was hard to build and develop, or because the concept of having some like a website where you go and browse?
Three key problems, right? One was the first one that you just said, which is the concept of a website, that someone's going to use a website to make a multi-$100,000 decision, was not accepted at the time. Number two, no one had built any technology like this before, so we were taking on technology risks. Like, let me just zoom you back. The mapping at the time was MapQuest and Yahoo Maps, where you would click on a map and then you would click an arrow. I want to go to the left, the north, south, east, west. And then you would wait 20 seconds while a new map loaded and it would show you one. The idea of an interactive map all by itself was a 1-0 exponential risk for any investor. And then number three, no one had proven that you could use user experience as a differentiator to create a business. So we had three major problems. And, again, now in retrospect, they're obvious. I love this article. I keep it in my office. I don't usually have it that close at hand, but I had just been looking at it because I've been talking to my team at Deep Sentinel about how important user experience is. But when we launched, the title, I'm holding up the article the title was a sit-down fly-by real estate overview. They didn't even know the term interactive map. They didn't know what to call it. No one had built an interactive website where you transacted. And
there's an entire industry around GIS, geographical information systems, and it's just a few lines of code and you can have an interactive map, and you can use Mapbox or any other technology to do wonderful things with maps.
We had to build all of that from scratch. We literally wrote an engine in Flash to do this. We had to write a map image splicer. We bought raw satellite data. We spliced it into pyramids. We had to reassemble it. Right? We did everything from scratch. No one had ever done anything like this. And what's cool about it, right? You're talking about it being an industry now, was that was so inspirational to people. The very first day we launched this, we had that article written about us in Seattle Times. It was picked up by a couple of trade rags nationally. We went from no one knowing what Redfin was, literally, our friends and family, and they told us we were crazy. We had 400,000 unique visitors in the first 24 hours Redfin launched. Our ISP, the internet service provider for us, shut down Redfin for about 20 minutes because they told us that there's no way that traffic spike is due to anything but porn. You guys are running a porn site, we get it. It's cool, lots of people try to trick us, and we're like, no dude, I promise it's not porn. It's not porn, I promise. And they were like, no dude, we get it. We've only seen this pattern a million times, we know what you're doing. And Michael Doherty, he got on the phone with him and he's like, no, please, can you come to our office? I'll show you what we're doing. And that's literally what it took for them to turn us back on. And they turned us back on and we took off. But it was like this user experience magical moment. I lived about 4 blocks from our office at Redfin, and on the way to work, I used to stop at this coffee shop called Cafe Ladro in Seattle. So it's a super snobby Seattle thing to say. So, I was in Seattle, so you can do that thing. So I go to Cafe Ladro every morning and I get this mocha, and I turned around as I was in line and I realized nobody's reading a book. Everybody has a laptop out. And I, maybe a little bit uncouth, right? But I looked at everyone's laptop screen to see what people were looking at, and I was blown the heck away. I just woken up. It's like 7 in the morning. I still haven't had my coffee, obviously. Every single laptop had Redfin on it. Every single person in this coffee shop, sample size of 1. I launched the thing at midnight, pushed go on the Apache server, and then go to coffee at 7 in the morning when I wake up, and everyone's looking at Redfin. I go to the Starbucks between my apartment and the office. Everyone in Starbucks is doing the same thing. It was that kind of revolutionary of a user experience.
It's a real feeling, right? When you have to pinch yourself, wonder if you're dreaming. I had a very similar experience. I founded an advertising company, and I was on a trip to Japan where we had set up an office, and we focused on user experience too. I was in the plane and I was thinking I was going to the toilet, and I just remember looking and I'm like, oh, there's someone playing a game on the plane. There's my ad. Oh, nice. Oh, wait, there's my ad too. This guy's connected to Wi-Fi. oh my god, there's another one. And it was a surreal moment where you're like, wait a second, I'm stressing out about my Japan trip and people are using my product. People are playing games and clicking on ads. So I know that feeling. It's unbelievable. Of course, it's not an overnight thing. I guess in your case, it was an overnight thing though, right?
Yeah, that's the thing a lot of people don't know about Redfin is it literally redefined kind of the speed of an internet user experience from 0 to 400,000 in less than 24 hours. It really, I mean, crazy. And the other crazy thing is I think back on I'll appeal to some of the geeks out there. The whole website, all of this stuff ran on a Dell 2650 and a Dell 1650. That's a 2U and a 1U server. We had no redundancy, no backup, like no server pool. It was literally, we designed it, we engineered the living heck out of this thing so that it could scale to handle that much traffic on 2 pieces of iron. This was before cloud, it was before AWS, right? Like that was, AWS came out of the team that I was on at Amazon under Udi Manber, a couple of years later. We're actually at the same time, but the AWS services that we're familiar with, S3 and EC2, those came out a year or two later. But Redfin was just an amazing experience in terms of everything about what one little group of people could do to change the trajectory. That to me was mind-boggling. I remember about a year and a half later, there was a presentation of interactive maps based on what we built at Redfin. Not no credit to Redfin necessarily, but like no one else had done it, so I'm going to kind of assume some credit here. But that ultimately became the inspiration for Steve Jobs to make multi-touch interactive screens on the iPhone. So the fact that this group of 15 guys that just stayed up late for a year building this thing could ultimately directly be the inspiration for all the mapping products, and then ultimately the inspiration for all this other stuff, that opened my eye to what entrepreneurship really can be, in that it's this kernel, and truly a kernel of a snowball that becomes the influence of the entire world and people's daily experience. I love now, I can tell my kids, when they open up their iPads and their iPhones and they open up a mapping application, like I'm part of that story. I'm not the headline in that story necessarily, but I'm a really important step that without that step, the story wouldn't have progressed.
David, it's looking back, it feels a bit like your timing was impeccable. Stanford at the right time, you were involved in the .com craziness, Amazon, Redfin. It sounds like only opportunities back then were this good, where you could find arbitrages where you can buy users at $1.50. Where you can go from 0 to 400,000 unique visitors. Do you agree? Do you feel like the heyday of innovation was back then, where it really was the Wild Wild West? Do you feel like opportunities like that exist today, or those days were special and that was like the most inflection point possible for technology?
I mean, you could certainly make a case for that, but I mean, if you happen to own Solana for the last 12 months, you'd say no, right? If you happen to start Solana 14 months ago and you're now worth over $100 billion, but nobody really knows how or why or whatever, and not 100 billion, I think it's like 20 billion, but like, no, right? I mean, what every time that we say that was the heyday of innovation and the fastest that things could change, we're proven wrong. And I think that's why we see all these mega funds coming up right now, and why I think this is a problem, by the way, but that's why VC has gone into this mode where it's really seed funding, where I'll give you a couple 100,000 to $5 million, and then you got to get to $1 billion valuation. And the whole game from a finance funding perspective right now is, I'm going to spread out 40 investments really early and then just see what sticks and gets to the next phase. And that next phase leap is so big. But if you think about it from a finance civ perspective, that wouldn't be able to be possible if it weren't possible to take $5 million and build a $1 billion company. And so that's why VC is so focused on 5 million to 100 million right now, is because it fundamentally is possible to do that. And I think that's actually, it's a great thing for VCs. It's a neat thing for budding entrepreneurs. And it's a really frustrating thing for great entrepreneurs, maybe not 1 in a trillion entrepreneurs, but great entrepreneurs that are at like 50 million or $150 million valuations. There's a big hole in the market right now for companies that are kind of at that stage.
And I think you alluded to the technological technological challenges just to launch an experience in the early days of Web 1, Web 2, it was very hard. Today you have these no-code platforms, you can plug and play things. Rather than even investing in product, you can invest in distribution and just build your basic concept out with, third-party software. So in some ways it's fast and easier to go from zero to,
like look at apes, right? Like for the love of God, right? There's 100 different platforms that look like that. You don't know which one it's going to be necessarily, but that one took off, right? And so
Yacht Club here, the NFT.
The NFT, sorry. So NFTs in crypto, doodles are another NFT, right? Like, and there are 20 others that didn't succeed, and none of them really required a huge amount of investment. And so the one thing that I don't like as an entrepreneur is that the financial model looks a lot more like gambling, high risk, high reward gambling than it does like the grit and energy of hard work results in a great outcome. And again, like, this is a little bit of a metaphysical debate here. Is that good or is that bad? Has that ever been the case? Luck is always involved, right? Like, you asked the question, hey, you were born at this time where you got the first .com and then all this other stuff, and luck is always involved. And I think anybody who takes credit for their success is an a-hole. Anybody who takes credit for 100% credit for their success, they're just a straight up a-hole, because it is luck, right? Like, I have asthma. Let me just make it super blunt and clear. Had I been born 100 years ago, I would have died in my infancy, period, full stop, right? Like, luck is involved.
In that context, we've all won the birth lottery, especially if we have viewers listening to this in the Western world, where the problems are very different than, for I would not even say unlucky, because that assumes the probability is minimal. We are the lucky ones.
The lucky sub 1%ers. Right, like, we had this whole debate in America about the 1%ers, and it's not to say that's not a real debate, right? But if you zoom back a little bit and you just say, of all the population of the world in its history, people that are alive now live a better quality of life than ever before. And then you zoom back and you look at it from a geographic perspective. If you eat 3 square meals a day and you rent a car or own a car and you go to a job and that pays for that, you're in the top 1%.
Even if you're listening to this podcast, you're working on yourself, self-actualization. There's other people who don't even have that luxury, they just need to, they have no time. They're burnt out, they're working, hard just to make ends meet, and
that's not to say that entrepreneurs don't work hard, right? That's not to say that during the heyday of Mark Zuckerberg's time at Facebook, and he's a little bit on the outs right now, he didn't work hard. I'm not saying that that's not a part of the journey, but it's a necessary or frequently necessary component, but it's not sufficient. Luck is a much more important component of success now than I think it ever has been. And I
of course, I think there is such a thing as improving your ROI on luck, being around the
Absolutely.
right people, having platforms like Stanford or Amazon, paying an interest in these areas is going to expose you to opportunities, which means your average bat eventually will increase. If you're at this, I feel like if you're at being an entrepreneur for like a decade or two, you're going to hit it big eventually. As long as you know when to move on to the next thing because it's not working. A couple of years of each thing.
That's the thing, right? Like, that's the hard question now, because actually, again, if you statistically run this out, right, your best bet to become a multi-millionaire, multi-hundred millionaire right now, I think, is to try things, give them 6 to 12 months max, and if they're not on the path to becoming $1 billion company, bail. I'm just speaking purely like statistically.
But it's unconventional because and I believe too, success comes right before failure, or rather right before you feel like things are about to end. At that point, when you're about to throw in the towel, you keep going for it, and eventually you hit it. But what you're saying is a different perspective, and I think in today's day and age, it's true. And I think that's also why there's so much pressure from VCs to founders. They want that very quick exponential high growth curve. You can have a company doing millions in dollars in revenue, but if its growth curve isn't looking exponential, no one's interested. And that next funded competitor comes along who goes from 0 to 100 quickly. And it's that addiction, because people have seen so much enormous wealth being generated so quickly. We've never before seen so many unicorns and so many billionaires being minted.
Yeah, unicorns actually used to be unicorns. right? I mean, and that's where in fact, there was a book, I think it's Malcolm Gladwell's Black Swan, right? That was the first kind of attempt to describe this. And what we've created is an industry that kind of pumps those things out now, and I like that, right? Like there's some really interesting things about that. At the same time, I've had to make the decision for me personally, right? Like I'll pivot to Deep Sentinel for a moment here. Deep Sentinel hasn't been an easy journey. Deep Sentinel's been a 4-year grind it hard journey, and what's really unique about Deep Sentinel though is, and I hope this is kind of an inspiration to people, is after grinding it out, we did hit that inflection curve. Like we did hit that exponential growth curve, but it was unique, right? And I don't think any of our investors would have said, hey, you're a jerk for walking away from this. And that's one of the challenges for me. Deep Sentinel isn't a wealth creating business. It is, right? Like I want to make money and I'm motivated by that. Deep Sentinel is a mission. Deep Sentinel is a security company that provides safety to families and business owners. And that to me, I chose that as much because I saw it as a huge market opportunity, as because when I look at my kids, I've made enough money, thank goodness, in my life that I could kind of peter out and stop now if I wanted to. And I had the freedom to choose something that I want to be my legacy. And the problem with that is that doesn't interface incredibly well with that financial market that I just shared with you. We're very fortunate that we went from a couple of 2x growth years to this year's going to be 3 to 4x growth, and that's what it's going to take for us to really make that next big leap in terms of venture capital. That's the thing that the venture capitalists are looking for. We're already at over 5 million in revenue, but what it took was that combination of over 5 million in revenue in a 3x 4x year. That's really the combination that investors are waiting for to kind of pile in, but that didn't come easily, right? And I think if I were just to be optimizing financially, I think the world would have lost, because what Deep Sentinel does, no one else does. It's really hard. It's and it's really meaningful. And that's, again, it's a little bit of a metaphysical debate, but that's one of the challenges I see in the world right now.